we are with ticker symbol HYLN, Hyliion Holdings Corp. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Hyliion has been breaking through all the support levels we've talked about previously, up at the $33 mark, even down here at the $27 mark, and now the last one, which was around $25.40, and we are slightly below it, and right now the price is at $25.37. There's a slight tug of war here, trying to bounce around. So if they can build a support at $25.40, this could be back on its way to newer highs. But if it breaks through it, and tomorrow it is confirmed that it breaks through the support levels we're about to talk about, this could be well on its way to newer lows and newer supports. So let's go ahead and move this to its new locations so that we can go ahead and see what is important for tomorrow. This is going to be a narrow stretch, and it's also important to keep in mind that the stock is actually below the 50-day moving average. It had a slight recovery from being in bearish territory for quite some time, right, on its way down, and then also slightly recovered, and it had a slight recovery last week, and then it started to fall again. So here we are now in bearish territory. The 50-day moving average is above it, and it is 27.22. 27.22 is an important number, because as we move further down away from it, this will start to test newer support levels and newer lows. But the bulls have a long way to go. They need to break through the first resistance level. They need to break through a resistance level which is slightly close to the 50-day moving average by 1 cent. It's 27.21. It's one of the highest points here before this fall, right? It had a slight bullish run here and before the fall. So honestly, the next resistance level is the 50-day moving average, which will mark the bullish territory if they break through it, or staying in bearish territory if they stay below it. But let's look here at what's important right now for tomorrow. So it's at 25.37, and our support is down here at 25.02. If the bears are able to break through 25.02, I want to emphasize to all investors, pay very close attention to what is going on with the stock and how quickly is it hitting newer lows and moving further away from the 50-day moving average, because 25.02 is already in bearish territory, and 25.02 is just a confirmation that we're getting deeper into bearish territory, moving further away from the 50-day moving average in a downward direction. So I'd pay very close attention to how quickly it's moving. The 1 minute, 5 minute, 15-minute chart. Look at your outflow and inflow to see who is dominating. Are there more buyers than sellers, or are there more sellers than buyers? Check out the volume amount, because also this has been on its way down and volume is pretty low. I mean, we're now at the 4 million mark. This was trading probably almost 10 times that, or even more, when this was on its way up and actually before the merger and so forth. So also volume is getting pretty quiet. So you have to pay very close attention to how quickly this is moving in which direction, because even though volume is quiet, if there's a large percentage of this being sold out of the 4 million, then it actually reflects here fairly quickly in the charts, changing the trajectory of the stock. So you have to pay close attention. If 25.02 gets crossed, again, I emphasize to all investors, pay very close attention to the behavior of this stock. Now, for the bulls, if they break through 25.62, this does not signify that the bulls have gained any control over the chart. This just lets us know and gives us as investors a sense of direction where this might be heading, and it's the first step to get closer to the 50-day moving average. But the bulls need to break through it and start to work their way up to break through newer resistance levels and newer highs. So keep that in mind as well. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to click the like button to let me know you watch this video. And if you feel inclined and encouraged to subscribe, and even some of my subscribers that haven't already clicked on the bell, double check that you click on the bell to turn on all notifications and not miss a single video that I post. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up and all the way to the last candlestick of the 6, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.